Ever wondered how to start investing in stocks? Investing, in a nutshell, is about making your money work for you. It's like planting seeds and watching them grow over time. It's an essential step towards financial growth and independence. By making wise and informed investing decisions, you could potentially grow your wealth exponentially. Understanding the art of investing can be your secret weapon in the battle for financial freedom. In this video, we'll be guiding you through the process of investing in stocks, breaking it down into simple, understandable steps. First off, what exactly are stocks? Let's break it down. Think of a stock as a piece of a company's pie. When you buy a stock, you're buying a small portion of that company, essentially becoming a part owner. Now, there are two main types of stocks, common and preferred. As a common stockholder, you get the right to vote at shareholders' meetings and the right to receive dividends, which are a portion of the company's profits distributed to its owners. On the other hand, preferred stockholders typically don't have voting rights, but they do have a higher claim on the company's earnings and assets. This means if the company is doing well, preferred stockholders get paid dividends before common stockholders. So, stocks represent ownership in a company, and the type of stock you buy determines your rights and dividends as a part owner. Now that you know what stocks are, let's move on to how you can start investing in them. Before diving headfirst into the stock market, you need a solid plan. Now you might be wondering, why is having a plan so important? Well, think of it this way. You wouldn't set off on a road trip without a map, right? The same logic applies to investing. The world of stocks is a vast and complex landscape, but with a good plan, you can navigate it successfully. The first step in your plan should be to identify your financial goals. Are you saving for retirement, a new home, or perhaps your child's college fund? Your goals will determine how much you need to invest and what kind of returns you should be aiming for. Next, you'll need to assess your risk tolerance. This is a fancy term for how much financial risk you're comfortable with. Some people might be okay with high-risk, high-reward investments, while others prefer to play it safe with low-risk options. Understanding your risk tolerance will help you choose the right stocks to invest in. Once you've got your goals and risk tolerance sorted out, it's time to consider your investment timeline. If you're young and saving for retirement, you might be able to afford to take some risks and invest in high-growth stocks. But if you're closer to retirement age, you might want to opt for more stable, low-risk investments. Now, it's crucial to understand that investing isn't just about picking any old stock and hoping for the best. You need to understand the company you're investing in. This is where research comes into play. Look into the company's financial health, its management, and its competitive position in the market. The more you know about a company, the better equipped you'll be to make informed investment decisions. Remember, the stock market isn't a casino. It's not about making quick, random bets and hoping to strike it rich. It's about making careful, calculated decisions based on solid research and planning. With a bit of research and a solid plan, you're now ready to begin investing. Ready to make your first move? It's time to open a brokerage account. This is similar to a bank account, but with a twist. It allows you to buy and sell stocks, bonds, mutual funds, and other types of investments. Choosing the right broker is crucial. Compare factors like fees, investment options, research, and customer service. Some brokers may offer educational resources and tools, which can be helpful for beginners. So how do you open a brokerage account? It's simpler than you might think. First, decide on the type of account you want, like individual or joint. Then provide some basic information about yourself, such as your name, address, and social security number. You'll also need to decide how much money you want to deposit. Most brokers require a minimum deposit, but the amount varies. Finally, review and submit your application. It typically takes a few days for your account to be approved. Once you've got your brokerage account set up, you're one step closer to buying your first stock. You've done the legwork, now it's time to dive into the market. So you've got your brokerage account ready and your research done. Now it's time to buy your first stock. It's like stepping into a bustling market, but instead of fruit and veg, you're after shares of a company. First off, you'll need to decide how many shares you want to buy. This will depend on your budget and how much you're willing to risk. Remember, Don't put all your eggs in one basket. Diversification is the name of the game. Now let's talk about how to actually buy the stock. You'll be faced with two main types of orders: market orders and limit orders. A market order is like walking up to a stall and buying at the current market price. It's quick and easy, but the price may fluctuate even in the split second it takes to make the transaction. On the other hand, a limit order is like setting a price limit at an auction. You specify the maximum price you're willing to pay per share. And if the market price drops to that level, your order is executed. This gives you more control over the price. But there's a risk the order may not be fulfilled if the price doesn't meet your limit. So how do you decide when to buy? Well, there isn't a one-size-fits-all answer. Some might say buy low, sell high, but predicting market trends is not always straightforward. It's best to base your decision on your research and personal financial goals. Are you looking for long-term growth or short-term gains? What is the company's financial health? What are industry experts saying? Remember, buying stocks is not just about making quick bucks. It's about investing in a company's future and becoming part of their journey. It's a commitment, and like any commitment, it requires thought, patience, and a bit of courage. And there you have it. You've just bought your first stock. Now that you've bought your first stock, it's time to keep an eye on your investment. Monitoring your investments is a crucial part of the investment journey. It's not about staring at the screen all day, watching numbers go up and down, but about regular check-ins to see how your stocks are performing. You see, the stock market is a dynamic entity, constantly changing with the ebb and flow of the economy, world events, and company performances. So it's important to review the performance of your stocks periodically. This could be weekly, monthly, or quarterly, depending on your investment strategy. While monitoring, you might notice changes that require adjustments to your portfolio. Maybe a stock isn't performing as well as you'd hoped, or perhaps a new opportunity has caught your eye. It's all about staying flexible and being ready to make informed decisions. But here's a golden nugget of wisdom. Patience is key. The stock market is known for its volatility, meaning it can fluctuate wildly from day to day. But don't let these short-term fluctuations push you into making rash decisions. Instead, remember your long-term goals. If you've done your research and believe in the potential of your stocks, then hold on to them. Don't be swayed by every gust of market wind, because in the long run, it's not about timing the market, but time in the market that counts. Remember, investing is a marathon, not a sprint, So, are you ready to start your investing journey? We've covered some ground today, haven't we? Let's take a moment to recap the key steps that we've dissected. First, we started with the basics, understanding what stocks are. These are essentially small pieces of a company that you can own, which can increase or decrease in value over time. Buying stocks means buying a part of a company's future success or failure. Next, we dived into the importance of research and planning. Remember, an informed investor is a successful investor. We discussed how to evaluate the performance of a company, understanding market trends, and the significance of diversification. Just like a well-balanced diet, a diversified portfolio can keep your investments healthy. Then, we walked through the process of opening a brokerage account. This is your gateway to the stock market. It's the platform through which you'll buy and sell stocks. We discussed the different types of accounts, their pros and cons, and how to choose the one that suits your needs best. Following that, we ventured into the world of buying stocks. We explored how to place orders, the different types of orders you can place, and how to navigate the sometimes choppy waters of the stock market. It's not always smooth sailing, but with the right knowledge and strategy, you can navigate through the highs and lows. Finally, we touched on the importance of monitoring your investment. Keeping an eye on your stocks helps you make informed decisions about when to hold, buy more, or sell. It's like keeping a pulse on your financial health. With these simple steps, you're now well on your way to becoming a savvy investor. Remember, investing is not a get-rich-quick scheme. It requires patience, diligence, and a good dose of courage. But armed with the right knowledge and tools, you can make your money work for you in the long run. With these simple steps, you're now well on your way to becoming a savvy investor. Happy investing,